Welcome to the Dividend Talk podcast, episode 167. Our dividends better than income from your job. Whether you're a seasoned pro or just getting started, Dividend Talk is the place to be for insights, analysis, and unsalted advice on how to make the most of your money through dividends with our own unique European flavor. Oh, and don't forget to subscribe to our podcast and join our community on Facebook at Dividend Talk. See you on the inside. Yo, 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 European DJI. How are you, my friend?
I'm doing really well, really well. I mean, it's been a buzzing week. I didn't spend a lot of time on social media. I was just too busy at work. Nice stuff at work, so I really can't complain. This evening, the nice bonfire. You know, it's autumn here. Nice bonfire, some sausages. Talking with some other friends and people. It was just lovely evening. So yeah, no, life is good. Life is good, and the dividends just continue to come in. What do we
Yeah,
want more?
exactly. Stick to dividends, boys and girls. That's one of our famous quotes from one of our friends in the Dividend Talk group. But let's get straight into it. I was going to talk about Ireland and playing football, but honestly, I just want to focus on dividends because football is really doing my brain in over the last week or two. And you asked a podcast question last week about the Dutch insurers. It's been quite popular, hasn't it? NN Group and ASR. And you asked the question, what is your take on these guys? Do you buy, hold, sell, or ignore them? And the results are quite interesting.
Yeah. So maybe a bit of a background for people that are listening. On Spotify, lately we are putting their polls in the form of questions and just open questions. And we use some of that data to understand where your needs are, where your interests are. But we also would like to really engage with you like this. So in this case, almost half of the group, half of the respondents, is a buyer of these insurance companies. They feel like now is the time to buy. That's what I take away from the poll. 21% is holding, only 2% is selling, and then 31% is ignoring. So those are people that are just generally not interested and feel like, okay, let's pass on. Maybe too hot to touch or something like that. I don't need it. But fun fact is that with this court ruling, only 2% is considering selling.
Yeah,
Yeah, which is really interesting.
I was surprised. I was really surprised at that. And I was even more surprised that a lot of people were saying to buy. I was expecting a lot more, let's hold and see, because we expect
Yeah,
NN Group to either settle or to go to court again. So
yeah.
it's still up in the air. So I was expecting a lot more to hold, but to have the majority say buy and then literally nobody say sell was a bit of a surprise. A bit of a surprise.
Yeah, but it also shows maybe the conviction in our community. I mean, when people are interested, right? Newsletter 3 on EuropeanDGI.com, you can register there. We have almost a 40-page article about NN Group. Feel free to read it up again and to get a deeper insight on the court ruling, because we literally read it all and digested it. But yeah, I've been a buyer as well. I bought a little bit more as well after the dip, let's say. I feel very comfortable that the company can handle it. Let's see, in November, I believe they have their Investors Day. We get more clarity. And I don't know how you are, right? But although I have an opinion now, I have conviction now, I do change it based on new facts coming in. I'm not the person that wants to be religious towards my opinion about a stock. I have my opinion based on my homework. I'm not so easily influenced by other people on social media or at the coffee machine telling me something. But if I learn on Investors Day that they suddenly say like, okay, we are going to pay a competitive dividend. Yeah, we know what that means, that word. It means the dividend cut is coming, yeah?
Yeah.
Then it changes my whole thesis. But until then and such, when the facts are as they are now, I'm quite convinced that they will weather the storm. But it isn't a sleep well at night stock anymore. as long as this court verdict is there.
Yeah, yeah. Look, as I say, we have to wait and see. Are they going to settle? Are they going to challenge it a little bit? We don't
Yeah.
know. But for the moment, dividend seems high. It's like quite a high yield at the moment. So usually when it gets to double digits, it could be in trouble. So
Yeah.
it's one to keep an eye on. As you said, it's not a swan stock, but this ruling for me doesn't impact them as much as the market gave it credit for.
Yeah.
So let's see. We're either right or wrong. I know our community are on buying and holding, but a lot of people on Twitter were quite the opposite. So let's see how that one plays out. Yeah.
No, yeah, so you're right there. Okay, and that brings me actually to the podcast question of this week, because Niels Tremor sent a question to us like, it's really hard to decide whether to sell a stock after a dividend cut, and it really creates quite an amount of turmoil going case by case. So the question is really, do you automatically sell after a dividend cut as part of your strategy, or do you do something else? So this week's podcast poll, go to Spotify, is do you sell directly after a dividend cut? Yes or no? Please let us know. We'll discuss the answer again and reflect on that in the upcoming podcast. But yeah, hey, let's go quickly to the news of the week. I believe something there around Microsoft and Activision Blizzard, right? It is about time or not?
Yeah, they finally closed the deal. I think they were waiting on the UK, if I believe was the last regulatory body to maybe give the green light on this, and it finally has paid off. I must admit I was apprehensive. I didn't think it would go through. There was so many roadblocks in both the US, Europe, and the UK. The British regulatory agency even put in a complaint about it, which I felt was going to be upheld. But turns out Microsoft have better lawyers and more power than we give credit to. So I'm happy for those that have bought Activision when it dropped. It was a bet at the time. I know there's a couple in our group were talking about buying it at the time. There was at least maybe a 20% upside on that. It was a bet. If this deal didn't go through, they were probably looking at a loss right now. But I'm happy for those who took the chance and has paid off. But I'm actually honestly I'm surprised this went through. It kind of shows to me that governments and regulatory agencies don't really have as much control of big tech companies as they believe they do. Honestly, I think the tech companies hold all the cards here.
Yeah. Well, I mean, I'm just happy as a Microsoft shareholder. I think it's an attractive deal. If you look at the whole ecosystem at gaming, what Microsoft is doing now is kind of where Disney is failing when it comes to the streaming and media. What they did technology-wise, Disney did a really good job. Yeah, with I think it was with this BAM networks or whatever it was. They bought themselves the technology for the streaming, but the content is really sluggish. And Microsoft still understands that content is king, and they are doing this really well. And this totally undersnows the other news from Microsoft this week as well, where they introduced now their solutions for doctors to work more paperless based, bringing AI in and everything. And I don't know, this is in Ireland, but generally speaking in Europe, this is an opportunity to digitize, right? The European healthcare system. I mean, our health records are a mess often, all the time. I mean, I've had situations that you need to do 2-3 times the research because you get forwarded to another doctor and they don't even often read the paper document that you have even. They just go straight away for another test. But I wish just to be everything digital and also really supporting the doctor. And this is where I could see like maybe large language models, auto-generating documents or reports for them that would be so helpful in time savings, that they can spend more time with us instead of sitting behind the computer, right?
Yeah. Certainly. I remember my sister now lives in the US, and when she came over to visit, the doctor, she had to be in the doctor for whatever reason, but on her phone she had an app which was directly linked to her doctor, had all the records.
Wow.
And she was told if she had to go to the doctor or the hospital over here in Ireland. Under no circumstances were any doctor to look at her without contacting him first and going through what was on that app.
Wow.
It just seems so far ahead of where we are over here. Like
Yeah.
it's as you said, it's a disaster when it comes to stuff like that. But yeah, there's definitely a big gap in the market for that, particularly in Europe.
Yeah. So Microsoft the king, and
Hey,
how awkward is it? We're talking here about gaming and solving problems for doctors in the pharma industry in a single company.
yeah, it's ridiculous. I don't know if you're much of a gamer or if you're a gamer when you were younger. Did you ever play Call of Duty?
Yes, of course.
Yeah,
Of
it's
course.
one of my favorite games, and I'm curious now to see, will Microsoft allow other platforms
Yeah.
to play and own this? Because usually Microsoft, isn't it? It's like a closed kind of
Yeah.
ecosystem that they have. And I know Call of Duty is really big on PlayStation, for example. So will
Yeah.
Microsoft keep that? I'm sure they will in the short term,
I
but
thought part of the deal was that they would keep it at least for 10 years also accessible to Sony and such. Otherwise, they couldn't buy it. That's what I at least remember reading a while ago.
yeah, I mean that's a short time. They don't have to release a new version until until 10 years
Yeah.
later, and then and so on. But yeah, I'm just really curious how they handle those type of titles, where they
Yeah.
are long term. Will they stay within the Microsoft ecosystem, or will they allow them other gamers
Yeah.
to play them? So
So tell me, I just want to understand what kind of dividend investor you really are. What were the top games that you loved during your youth?
oh, during my youth, it was pretty much Call of Duty. There was a game. Oh, what's the game called? It was like in Saudi Arabia. It was based. You were a thief running around. I can't remember. I can't remember the
Okay.
name of it. And then FIFA,
Yeah.
and there was one before FIFA as well. There was two of them. There was FIFA and
Yes, yes, I know what you mean. It was from the other brand.
yes,
Yeah,
from
yeah,
the
yeah. Yeah,
other
yeah.
brand. Yeah, and I
Yeah.
flip flop between those two.
Ah, okay. So I was a Nintendo guy. I had all the Nintendos, 8-bit, 16 bits, the Nintendo 64. I had them all. Perfect Dark, great game. Banjo-Kazooie, of course. Those were my teenage years. But then, I played in the Return to Castle Wolfenstein clan for a few years, capturing the flag. That's how I spent my student times. It was really, really good in those times, early 2000s, right?
Yeah, yeah. We were spoiled. Like if you think back, PlayStation One, we had loads of games. We had Mortal Kombat, Crash Bandicoot was there.
Oh,
Remember
yes.
Crash Bandicoot? I remember playing Resident Evil for a while, Grand Theft
Yeah.
Auto. So many games. I
But
can't remember.
also these stupid games like Lemmings.
Yes, yes.
Okay, let's get back to dividends again. Yeah.
So this week, actually, do you know what? This week, I love when I see Walgreens earnings. It always for me,
Ooh.
it's always one of the first companies that reports earnings. It's always earlier than most other companies, so it is always a signal for me. Earnings season is upon us, and obviously, I own Walgreens, so when I see it coming up, I know okay, I need to get down to business and start concentrating again. So they have released their earnings. And you could probably tell by their share price, it kind of spiked a little bit. I don't know why, because there was pretty much no good news in it, and came back down then today. But just to give you some numbers behind that, in the fourth quarter, they made a loss of 0.21, so 21 cent to the dollar. Their adjusted earnings was actually up, so they adjusted for currency fluctuations. But mainly their earnings is down because of COVID-19 vaccines. We know that they have decreased. They probably put too much faith in those vaccines at the time, and they've been suffering ever since. Honestly, it seems like every quarter now since 2001, they've been saying vaccines are going down. I mean, it shouldn't be a surprise to anyone at this
Yeah.
stage. What's interesting is that their sales have actually increased over the full year, but they have a lot of operating losses. And this is coming down to litigation again. We know that there's a huge opioid claims that are ongoing, and
Yeah.
that's impacting their net earnings. As such, net earnings over the year has decreased significantly. what they're trying to do to offset that is cut costs, but there's only so many costs that you can cut. They've said that they've cut it by 1 billion over the last year. I've not looked through their financials to see if that's true or not. That's what they've said. But as a dividend investor, what is concerning is that the free cash flow has decreased significantly. So you're looking at about a 1.5 billion deduction from where they were this time last year. So they can't cover their dividend as it stands at the moment. They're dropping significantly. Their yield is, I don't know, it's probably 8 or 9%. It's
8%.
yeah, it's at an all-time high. You got this ongoing litigation. You've got the reduction in vaccines. It's not looking good for these guys, I have to say.
Look, they are trading at a price of 19.99 at the moment.
Yeah, and you know what? Their fair value is probably somewhere in and around that. Looking at these
What a
numbers.
shit show, right? Because people were buying the stock actually in the $80 range in 2017. It was relatively low yield, right? But everyone was then, of course, extrapolating the forecasts into the future, right? It also just tells you that you cannot really ever look back. You really need to understand, is this business declining or not? And it's hard. I think from the 40 stocks in my portfolio, probably I will be wrong on 5 or 6 of them. Yeah, just not seeing that the market changed, right? But since then, this just went straight down in the long run, right? It's just been a gliding path.
But you can see it from sales were declining, but
yeah,
you can see that they've bottomed out a little bit. And look, we've had a 9% increase this year, and I think there's a bottom there on sales. I mean, there's 2 companies in America. There's CVS and there's Walgreens competing against each other. So I think from a volume and revenue point of view, they're going to be generating around 35 billion as a floor. But I mean, you look at their operating losses, you look at the litigation. It's really this OPI claims that's ongoing. It never seems to go away. Again, it's litigation that's killing.
But it's so hard for as dividend growth investors to sell, such a stock, because the dividend is still there. Yeah. So what I'm trying to say is, like, you have 5 years of decline here in share price.
Yep.
Yeah, because the business is deteriorating. But we also have some few stocks in our portfolio where we know it's not going into the right direction, but we give them slack because the dividend still feels safe. It's still growing. But I think the dividend safety really came into question in long-term prospects like last year or something like that, right? 1.5 year ago. But if you go back to long-term chart, then you're still already talking about a 30-40% decline from the all-time high. And it shows you that, just in my opinion, that if you were investing in Walgreens, let's say in 2014, 2015, you had the classical example of a yield trap and of a value trap with this company. But the thing is, it's really easy to say that afterwards, where it's now.
Yes.
But if you now look at how it developed, is for me the classic example of a value trap. And now our people are again thinking like, 25 years low. Yeah. How low can it go? Oh, actually the adjusted earnings look better than maybe expected. Yeah. And you can get a whole narrative that now the bottom is in and such. But I'm sure if I take the headlines from the last 5-6 years from Seeking Alpha and pulled out the positive ones because we are maybe biased towards those and we want to read them, then it's continuously probably the same headline. Like now it can go turn around or something like that.
Yeah, and just looking at Seeking Alpha, just because you mentioned them, I'm looking at them, and there's probably on the first page there's probably about 11, 12 articles. Okay.
Yeah.
I've got 1, 2, 3, 4, 5 saying buy.
Yeah.
Only 1 saying sell, and the rest are hold. And I mean, that kind of ties up with what you're saying. People, I think, because these guys are a dividend aristocrat, you tend to give them a little bit more time, a little bit more slack, because they're committed to their dividend. But we spoke about on this show how to spot declining companies. We also spoke about what we look for when you're selling a company, and I think this is a classical case at the moment. It is in decline. I don't know if they have enough to turn around. There's a lot betting on this medical villages and they're trying to do the right things, but can they actually execute it is the problem. And they are struggling. I think you're right. I think it's definitely a value trap. But if I was not invested in them, I would stay the hell clear of them for the
Yeah.
time being. And that yield, that it's not sustainable. These are prime, in my opinion, they are primed for a dividend
Dividend
reset.
cut.
A dividend
Yeah,
reset.
dividend reset or a competitive dividend.
A competitive dividend, yes.
A competitive dividend. That's
These
it.
these are primed for that, in my opinion. So look, it's not a good look. They're forecasting slightly not great next year either.
Hmm.
So let's see. But yeah, not great from there. Not great from
Yeah.
their end.
Well, then talking about other earnings that came in actually is PepsiCo. And this one's, of course, really interesting after Novo Nordisk almost killing this company, of course, with their weight loss drug. But really, really quickly, just PepsiCo is just doing what it needs to do. It grew its revenue about 7% in the third quarter, what they call organic revenue growth, almost 9%. And I would say the EPS went up by 15% quarter over quarter. But if you look at the core earnings, as they call it, so the non-GAAP, not the biggest fan of them, of course, it grew by 16%. So in my opinion, it was a really good quarter, actually. And yeah, I need to do some more due diligence because I own only a small position in PepsiCo. It's one of my top 10 foundational stocks. And why is it there? Because I like the combination of the sugary drinks and the snacks business. I think it's really a good combination. I know there's always this health topic around it, but like I'm really focused on health. But in the weekend, I just want to have a Coke. In this case, I prefer Coca-Cola, but also some Lay's chips. Yeah, we don't need to be eating carrots 7 days, 24/7.
What I do like about this company, and I mean the management, I think they were very quick to realize with inflation that it's hard to pass on, particularly for an unhealthy
Yeah,
snack or an unhealthy drink. It's hard to pass on increases because once they start going up and they get comparable to healthier choices, people will naturally go to healthier choices. But one of the things that they did, that I read that they did, is that they started selling smaller packs.
yeah, I can see that. Yeah.
Yeah, which helped to meet the demand, right? So instead of increasing the prices, they decreased the size of their packs and probably kept the prices in around the same, and that seemed to help. I
Yeah.
think that was quite a clever move from management, I have to say.
Yeah, but I find the Lay's chips honestly a bit too expensive now. So when I'm with my kids in the shop, I'm looking already at B brands.
Yeah,
Just because the issue is that the B brands typically kept the chips almost at the same price. So the gap between the two products have been really growing. And it's not that Lay's is like that much better that it justifies double the price, because that's what it is. Yeah, I can get a package here of Lay's for almost €2, and I get the home brand for €1. Yeah,
yeah, yeah, and
yeah,
I mean, you're paying for the brand.
yeah,
And some people like that. Some people like
yeah,
to they need to have the brand, even though
yeah,
you could have the exact same product in different packaging. It's the brand
yeah.
that they want. So
True.
they're the people you need, though, because if they
Well, I'm the one that that doesn't show up anymore in the volume numbers, where they say like small volume decline, but the price compensated, and they always call this the mix. Yeah,
yeah,
but still they have so many snacks that I'm still interested to eat from them. So PepsiCo is just a well managed business with a really nice two product lines. They are not yet having the Coca-Cola margins, but that maybe also gives them the space to get there in the future. Nice business. I'm liking it, and I need to do my homework again to see like is now the time to start consider buying it again. They have a yield above 3%. So yeah, quite interesting for me.
good, nice one. So I would expect over the next few weeks we'll do a lot more earnings. I think it's a good
Yes.
time now to just to say to people, if there's any companies in particular you'd like us to talk about, maybe let us know in Twitter, comments, Facebook, or by email, and then we'll make sure to do those ones first. But today we decided to pick a nice, easy topic. It's been a long, stressful week, and the question is: are dividends better than income from your job? I think we're going to biased there, really, aren't we? Let's be honest.
Yeah, we are biased. I mean, we love active income really a lot. So, but tell me, what is the first thing that comes to mind for you?
Yeah, the first thing, and many of my Irish listeners will recognize this phrase. It's less stress, more success. And growing up in Ireland, when you were doing um, you do these leaving certs and inter certs.
Hmm.
When you were studying for them, they had these books and they were called Less Stress, More Success. And they were just concise notes of what you were studying, and they were really popular here. But yes, dividends for me mean less stress, which gives me the opportunity to be more successful, because I think when you're stressed and you have I mean, in an environment where you're stressed all the time, I don't think you can be your creative self. You're
Yeah,
probably under pressure, so you're probably doing the bare minimum that you can just to get over the line.
yeah,
Whereas I think with dividends, you don't have that problem because there is no stress. The only stress you can potentially have is Walgreens going to cut their dividend or not? I
yeah.
mean, that's about the size of it.
But even now already, like that half of my expenses are covered by dividends. It gives me so much less stress because at work you don't need to be really afraid to get fired. I know I can drive an Uber in the evenings to collect the rest of the month if needed. Yeah, so it gives you much more mental freedom at work as well. You don't have the fear of stress of losing your job or something like that. So how this works for me is that I'm feel much more comfortable just to share my opinions, say what I feel is the best for the company, and I think it allows me to also make more impact and do a better job. And I think this is already along the journey really liberating. Yeah, you really don't need to work, and it's not just the dividends, it's also like the debt that I paid off and such. Just in general, the passive income and the financial situation allows me just to be a better employee. And having this experience, I don't understand why employers don't put more attention to this. They would benefit from I would say it, from a workforce that is more wealthy, let's say, and in that sense, and therefore also more liberated to think and to really speak the mind and to follow their passion there, right?
Yeah, what you're essentially saying, it's giving you more confidence to
Yeah.
not just sit back, just to stand up, be counted, and say what you feel without fear of consequence. That
Yeah, and that's also better accountability, I think, which the employer benefits from. Definitely, definitely.
Yeah, it's an interesting take. If employers were to promote financial well-being and encourage you to be
Yeah,
wealthy, but then I always feel like this,
yeah.
that people like you are in that situation, because of your work ethic and because of your, I would say, how you deal with situations and stuff like that.
Mhm.
People that are not in the same position probably do not have the same work ethic, and if they had
Yeah,
the opportunity to be wealthy, they would probably just be more lazy. And in my opinion, I would feel that
yeah.
was the case.
Well, yeah, maybe now we get to the discussion of universal basic income quite quickly, right?
Yeah,
Yeah,
we
let's
we
leave that for another day.
yeah, let's leave that there. Let's leave that there. But yeah, no, I agree with you. Having a base, having a solid foundation behind you, knowing that your finances are, your basic bills are covered, does give
Yeah,
you a little bit more freedom in work to speak your mind
yeah.
and
You
without
some people
consequence.
just call it "fuck you money," right?
Yeah, yeah, and I don't see it as that. I don't see it as that because I don't think I would
Me
ever.
neither. Yeah,
I have too much pride in my work, and I enjoy what I do. I would never say off you go.
yeah. But I
But
also live with the mantra of just be kind to your colleagues.
yes,
Yeah,
exactly,
yeah.
exactly. And one of the other interesting things is dividends. They can't fire you. Your boss can.
Yeah, yeah, exactly. And that's really one how I look at it as well. Like, you're owner of a business here. Yeah, so they can't fire you. The only thing that can happen is that the business says, like, you know what, we'll go private. Yeah,
Yeah,
and then you kind of need to hand in your position. But other than that, they can't fire you. How
yeah. Well,
cool is that?
or can they? They can cut the dividend.
What? Yeah, okay, that's true. but they can also fire me in the sense of make me financial independent and retire early.
Yes, they can do that too.
Yeah,
Yeah, so
yeah,
it's always an interesting one because as an employee, it doesn't matter how good you are,
yeah,
you can always be fired from a company.
yeah,
And my first job, work for Crystal, is well known within my area. It was meant to be a job for life. They go
yeah,
bust, they go under. There's over 2,000 people unemployed, not because they're bad employees, not because they've
yeah,
done anything wrong, but because the company wasn't financially savvy enough to keep themselves from
yeah,
going bankrupt. And that's always a fear, particularly if you're with a company that has high levels of debt. Imagine being a
yeah,
Walgreens worker, for example, right
yeah,
now.
yeah,
Knowing,
yeah, yeah,
yeah, I
yeah,
mean, I mean, they are going to be looking at cases, and I imagine they're talking about cutting costs. There was 1 billion in cost
yeah.
cuts. What does that mean? Job losses.
Automation. Yeah,
Job
exactly.
losses. It means job losses, and it
Yeah.
doesn't matter how good you are. If they feel like they can save money from you, you're out the gap.
If you're in the wrong place at the wrong time, yeah.
Yeah.
I think anyone can get fired in their career. I think it's an illusion to think that you will always have a job. I think football coaches are the nicest example, right? We were talking before the show about the Wrexham documentary,
Yes.
and then the football coach was literally mentioning there, like, you shouldn't get emotionally attached to the club because every manager gets sacked, and it's true. And now this is not the extent to like that to an employee, but I always imagine and I prepare myself mentally for it to a similar extent, that I don't want to get emotionally too deep attached, because I know that maybe at a certain moment you get a boss that you just don't like, and somehow you get into a negative mode, you say something wrong, and you burn the relationship, and person doesn't want you anymore, and you're the first one in restructuring gone or something like that. Other time, to your point, you're just part of the wrong department that suddenly isn't needed anymore. Yeah, so there can be so many reasons, and your dividends can't do that to you. It's actually the way around. Yeah, we
Yeah.
order them to continue coming. So, but this is also the interesting part of that, right? Because behind behind the dividend, there's always a person, and this person is working hard for us. And if I look at my entire portfolio, there are just a million people working for me. This is not at work. When I get my income from a job, it's me, the one working for it. And if I would get dividends from my company, all my colleagues would be working for me suddenly.
Yeah.
That's such a difference, right?
It
24 hours a day, people working for me.
exactly. And if you have shares in your own company, imagine how motivated you must feel having everyone
Yeah.
in your company contributing to your extra income at the end of the year. It must be a little bit more motivation. I have to say, I don't invest in my company. It doesn't pay a dividend, but if they did, honestly, I probably would, because they're trying to do some good things. The new CEO came in and has a real vision that wasn't there before. But I could just imagine getting paid extra from my company, having everybody there, knowing that the guy sitting beside me going, "Hey, you're actually working for me, and you don't know it."
Yeah, so I invest in my company shares, and I sometimes make this joke like, "Hey, I'm not just your colleague. I'm your boss.
Yeah.
I'm a
And
shareholder of this company, and I feel shame of you taking coffee now. Work a bit faster.
yeah, get to work. Get to work.
Yeah, exactly.
Yeah, we'll be horrible bosses.
Earn me my dividends.
But on a more serious note, if you look at dividends in your salary, I mean, your salary hikes are governed by, well, loads of things.
Committees,
I mean,
yeah,
committees, um,
budgets, yeah,
budgets, and then even at that, they're capped. And then we have
yeah,
a maximum bonus, but to get that, you have to get like a 6 out of 6. There's
yeah.
nobody going to get the highest ranking, so you normally get a 5 or a 4, say, which means your budget is
Yeah, and they
lower.
look at fair market value, salaries, and all these kinds of things.
Yeah,
So you get benchmarked.
yeah, and you have to
Yeah,
balance it across the departments. So if they give someone a
yeah,
really high score, that means they have to give someone a really low score.
yeah,
But your dividends don't do that. Your dividends can actually grow faster than your salary. Like if you look at some of the companies that we talk about, Texas Instruments with double digit hikes
yeah.
consistently, Microsoft as well. You're getting hikes that grow way faster than your salary.
Imagine you work at Johnson Johnson, right? And then you're working there in the company. and you're a decent employee. Yeah, nothing sexy or fancy on the upside, and also not on the downside. Just doing your job, muddling along. Yeah, and if you're then in a country working for Johnson Johnson, that's kind of a mature company. Your salary will probably grow 2% per year. If you had an awesome year, maybe 3%. But over that same entire lifespan of you working in this company, the dividend grew by 6 or 7% annually. It's the best example for me that shows that dividends grow faster than your salary.
Yeah.
Yeah, and so for me, that is so clear, and the effort you put in it is also totally different, because on your active income, it's you again. On the other ones, millions of people in your portfolio doing this for you. So
Yeah.
you don't even need to work for it. You need to just do this contribution to this company, buy an owner's stake of ownership in the company, and then you get the profits shared back in the form of dividends at a higher growth rate. And we're talking about dividend growth investing, right? And dividend growers, not
Yeah.
just dividend companies. Yeah.
Of course, yeah. Well, dividend growth is different than dividends. There's plenty of
Yeah.
dividend companies out there, but dividend
Yeah.
growth is much better. But
Yeah.
you give the example of Johnson & Johnson. If you worked in a company like that and you're an employee and you're financially savvy in some way, and you're looking at the end of the year and you're getting a 2 or 3% pay
Yeah.
rise, and then you're looking at the shareholders and they're getting a 7% pay rise,
Yeah.
it's probably only natural you'll go, hey, do you know what?
Exactly.
I think I'll have some shares there.
Exactly. And if you then have a diversified portfolio, what's also really nice and why dividends are better than active income, you get paid multiple times a month. It's literally when you would put the sound of a notification and change it on your phone to ka-ching. Yeah, you're just sitting at work, and maybe on a nice day, you would hear several days like ka-ching, ka-ching, ka-ching. Your colleagues would be watching, and you would say like, "Hey, I'm getting paid today again."
Yeah, yeah,
Yeah.
and a couple of times a month, but also from multiple companies, not just one.
Yes,
So
exactly.
you've spread the risk out completely. You're not
Yeah,
relying on your boss. But I mean, you sound like a salary worker, like myself. I get paid once a month from my employer. So dividends, as you said, it could be every day, it could be every second
yeah.
day, it can be any period. So yeah, it's I still get excited. I don't know about you, but I still get excited when I get that. Do you know what? That's why I like trading 212, because they
Yeah,
actually send me a push
yeah. The
notification. They
notifications.
do,
Yeah,
yeah, yeah,
I've got all notifications turned off on my phone, except the ones from Trading 212,
yeah,
because they all the time come up and then ping, and it's just like when you're in a meeting, and you see it from the corner of your eye on your phone, automatically you get this kind of like dopamine shot in your body, and you feel just more happy.
I,
Yeah,
I really wish the Giro and Interactive Broker
interactive brokers would do the same.
do the same, because I love seeing it, and my trading 212 is relatively small, so the payments are
Yeah,
small,
exactly.
but I still get it, and it makes me smile. I could be in work, I take out my phone, I
We
go,
really need to give this feedback to those brokers, but because I believe that those brokers would also be fundamentally interested to put a smile on our face. Yeah, that they should make us addicted to dividends and such, and why not give us this dopamine shot all the time?
yeah, yeah. It's
Yeah, I
it's
don't know. I really don't understand why they are not doing this.
it's such a simple thing. It's just a push
Yeah,
notification out when something
when
comes
you get a
into your account.
dividend.
Yeah,
Yeah, yeah, and they would put a smile on the face of the customers.
yeah. Maybe we should contact support on both.
Yeah.
Let's see. Let's
Yes,
see if
let's
they'll
do
do
that.
it.
Let's do that. And we're talking here all the time about like this is really an ode to dividends, right? And what is so interesting is like even I mean it's crazy when you think about it. Dividends even get taxed less than income, yeah, active income from jobs. So you don't work for it. Let's say you put only some money, I guess, at risk. That's the thinking behind it. And in my case, I pay 19% dividend tax versus 30 something percent on my active income. Yeah. And also all the social contributions on top of that with my active income. I don't have that with dividends, just clean cut 19%. I wish it, of course, to be zero, but just clean cut 19%. That's it. So
Yeah.
it's even more tax efficient.
Yeah, well, that's not the case in Ireland. It's classed as income for that reason. They've copped onto it over here. They're clever guys. But yeah, we pay it at income tax. But I do know throughout Europe and the US there is tax benefits for that. So look, I'm hoping Ireland catch along sometime and give us investors a break, because honestly, they give us such a hard time over here compared to
Yeah.
corporations. Corporations come over here and pay absolutely no tax. Think of
Yeah.
Apple, think of Microsoft. They come over here, set up an office, and no tax. And unfortunately, us retail investors bear the brunt of that, which is why a lot of investors shy away from the stock market, and
Mhm.
they're forced into property. But even the taxes on owning properties now, and landlords, it's crazy over here. So
Yeah.
unfortunately, we're taxed at the rate of income, but I would much rather be taxed at that for doing nothing than spending, I don't know, I would say 8 hours, but honestly, I'd probably spend
Yeah.
more, closer to 12 hours a day working. So
Yeah.
I don't mind paying the tax, but if I was doing nothing and paying it, I'm happy with that too.
Nice. Yeah, and then last but not least, Derek, for me, there are just no limits on dividend income. I mean, a company can decide to double their dividend if their business is running well. Yeah, there's just no limit to it. And we have seen it with some companies like ASML, how they're growing the dividend, Evolution Gaming, how they're growing their dividend, L'Oreal, LVMH, you name it, Home Depot. There's so many companies growing their dividends into the stratosphere because those are well-run businesses. They continue to gobble up market share. They continue to innovate in new products. There is no ceiling to dividends from that point of view. And if you're in a company working, you usually have salary ranges based on your seniority. You need to get a promotion. All this stuff doesn't exist for dividends. It's just like if the company does well and they can grow, the dividend will follow.
Yeah.
You don't need to worry about working your ass off in the sense of in some companies it's respected to do overtime or something like that to get a promotion out of it
Yeah.
or this bonus. Dividend income, you don't have that. It's just lovely.
No, we do have to balance it out a little bit here. There must be some benefits of active income over dividends. Is there any
No,
you can think of? Um,
no,
the one that would stand out for me is to get the same income as you
yeah,
earn right now, you need to put in a lot more money at the beginning. You can get there over time by reinvesting in
yeah,
dividend growth, but if you truly want, if you're just starting and you wanted to live off dividends and not active income, you would have to put in a lot more money to do that. So that's where your active income comes in. It gives you, for me, I view active income as my pathway or gateway to earning more dividends, which
yeah.
gives me that freedom.
Are you ever getting invited for birthdays?
I'm getting old now, not so
What
much.
a party pooper you are. Come on, don't start talking now about why income from a job is better than dividends. Come on, quit it. Of course not.
When I get invited to parties.
We're not going to balance this. I mean, this is a pure ode to dividends. This is like a love story. We're really like this Romeo and Juliet. That's us and the dividends. Why are you starting to spoil this episode?
Hey, everyone loves a villain. Sometimes you have to throw in their spoiler, but
Oh my god, I'm going to cut this out. I'm going to cut this entirely out.
awesome. So there we have it. Dividends are better than active income from a job. Let's move on to some listeners' questions, shall we?
Yes, let's do that. Let's bring you back to earth again and
Yes.
wash your mouth.
Okay, so I'll take the first question. This first question's from Centrino, and it's to me directly. And he's asking me, what CEFs have I bought? Are their share price? Share price is not decreasing on a 5-year chart. So specifically around CEFs, I think I've spoke about it before. I was buying them. Interactive brokers copped on that they do not have a key investor document, so they no longer allowed me to buy them. So I don't buy them. What I am buying is investment trusts, which are similar to CEFs, and they are based mainly in the UK. And the ones that I've bought are Murray International, and also there is a New York High Yield Fund, or New City, not New York, New City High Yield Fund. Both of those share prices have not been increasing over the last 5 years. Actually, the share price that I bought them at over the last 12 months, they're probably in and around at the same share price. It did go through a bit of a tricky period over the last 18 months, I have to say. But with that, there's risk, but there's also opportunity. I tend to focus on those two because they're well managed. I listened to another podcast specifically around CEFs, and the CEO of Mori International has been on. Also, there's been commentary on New City High Fund, and I have to say, he follows Mori International follows a dividend paying. So he invests in dividend companies. I really like his strategy, and they try to raise their dividends in line with inflation, which they have done every year since inception. I can link to both of those companies in this, and also the podcast that I listen to if you want for more information, because it's specifically on in on those funds. But yeah, I can't buy CEFs, but investment trusts, that's where I'm buying, and they do give me a little bit of a higher yield. Looking at 6, 7, 8% yields on them. As I said, it's part of my high risk, high yield part of my portfolio. But then I look at NN Group, I look at Legal and General, I look at British American Tobacco. I seem to have a lot of high yield companies in my portfolio.
Nice.
LDev has asked us, what is your exit strategy if you have any?
Yeah, so I can read this in two situations. It's like, when do you sell stock? That is when the dividend is cut, I will consider it. Or when I don't see any future for the company. For instance, I start selling 3M because of the litigation, and I find the dividend at risk. When you think about my portfolio as an exit strategy, this is death. That's simple. It's my coffin, or whatever they do with me after that. However, I am sometimes thinking about, like, damn it, what if I would fall dead tomorrow? Yeah, what would my wife do with this portfolio? Will she be able to deal with it? So I'm really, really thinking about just writing kind of a letter already now, and just with the instructions in it and what to do and what not to do. But this is really difficult, really, really difficult thinking like that. So no exit strategy as such. How about you?
Yeah, I mean, exit strategy for me, probably it's conflicting, because we're talking about Walgreens earlier, and it's easy to say, you look at all these fundamentals, but generally you give them some slack. But I think knowing that a company is in decline, and then if they cut the dividend, that's probably when I will exit the company. A dividend cut on its own is not an initial sell for me, but obviously if fundamentals are deteriorating, and I think VFC is a very good example. It was one where you could see fundamentals going, it cut the dividend, but it was definitely worth selling them at that point because the fundamentals were still going down. And I feel like Walgreens are probably going to go along the same path if they have to cut the dividend. So no exit strategy as such, but I am aware within my portfolio of companies that are not as healthy as others, and I'm prepared to sell them if they do cut the dividend. NB has asked us about Coca-Cola. Are they worth buying, and do they have any growth prospects?
Yeah, and Flo is the next question also about Coca-Cola, right?
Yes.
Look, we did a stock card with the last newsletter, so go to europeandgi.com, download the last newsletter, and there's a link to the Coca-Cola stock card. In there, I would like to see it still a little bit lower. I think it's now really around fair value-ish, still a little bit. Maybe an initiating position. I mean, it is an iconic brand. It is stock that I could see in my portfolio. It will never be a tier 1 position, probably, because for that I lack some fundamental conviction in the company here, because it's such a mature business. I think over the next 20 years it will somehow struggle. That's personally what I think. But it's also a beautiful business, right? So let's say maybe I do my first branch at 50, something like that.
Yeah, and then the question is around growth prospects as well. What do they have?
Yeah, low growth prospects. I don't have any illusions there.
Yeah, but to be fair, they've made some shrewd acquisitions, particularly in the coffee business with
Mhm.
Costa. They're buying up some vitamin water businesses. They seem
Yeah.
to be buying kind of popular, fast-growing brands. And,
But
and
is it becoming meaningful? Because when I looked a few years back at Costa Coffee, it was hardly worth mentioned in their annual report. So I don't know, right? But where are they now? Is it now finally contributing something? Because if it's just 2 or 3% of entire sales, yeah, if it grows 5%, Costa Coffee or 10%, is still a little. Yeah, and
yeah,
it's a high margin business compared to Pepsi.
yeah, exactly. But I don't know. I don't know what the exact revenue intake of
Yeah,
coffee is, but I do know they're pushing it quite well. But it's
yeah,
not just the coffee. It just seems to be they're buying different sets of businesses outside of
mhm,
sugary drinks and trying to
yeah,
implement them, and they're doing that quite well. I think Vitamin Water's one, Costa was another, Body
yeah,
Armor I think was another one. So they are looking outside the scope of sugary drinks, and obviously
yeah,
then they have their Diet Coke variations
yeah,
and stuff that are
yeah,
still doing quite well. So look, I, I think it's a slow, low growing business, but I think it's stable. The dividend is
yeah.
safe, revenues are safe, and as you said, it's an iconic business. So it's for me, it's worth having in your portfolio. One penny at a time has asked us, what is a lower allocated stock by weight in your guys' portfolio you would like to build out more?
Definitely Starbucks.
Yeah,
I was able to buy some at $70. When was it? 1.5 year ago. I would like to buy some more of that one. Yeah, and L'Oreal at the right price.
yeah. For me, it's probably someone like Texas Instruments is still quite low in terms of weight.
Yeah,
I add a share here and there, but in terms of weight compared to,
I
uh,
find them attractive now. They're the fair value, in my opinion.
yeah, I
Really.
think so. I think so too.
Yeah.
Hugo has asked us about Beatrice. He thinks they're severely oversold. Is their dividend safe with the rising of interest rates?
Yeah, so they have a lot of debt. They're of course paying off the debt. Um, is the dividend safe? I mean, I haven't done my last due diligence, but I would say they're the dividend itself, also because they have paid more attention to buybacks at the moment than growing the dividends. I would rather say like it's borderline safe slash questionable. So when we say this, it's not unsafe yet, right?
Yeah,
Questionable becomes in the gray zone. And I think it's touching this gray zone. I don't see them cutting the dividends, but a lot depends on the transformation success of the company. If they're struggling with the transformation, it will mean that they will not be able to pay off the debt according to their intention, and then it means that their expenses will go up with the reissuing of debt. And then at a certain moment, not yet, the cash flow might just not be enough. But I don't see this happening anytime soon. So, and is it severely oversold? Probably. I just have already, it's a tier 4 position for me, which means it stays small. It's a full position. So I would love to buy more, but my rules tell me not to do it. I'm sometimes looking at anything like, I just 100 shares. Come on, do it. And I think like, no, no, stick to the rules, stick to the rule. I burnt my hand on this in the past.
yeah. For me, it's not a question of is their dividend safe. Is their dividend a priority? And it's not. At the moment, reducing
Yeah,
debt is their priority, which
yeah,
honestly it should be. And I think they're
it's the
doing.
right thing to do.
I think
Yeah,
it's the right thing to do. If they kept increasing the dividend, I know they kept it flat this time. If they kept increasing it with double digits, looking at the amount of debt that they have on their
yeah,
balance sheet and with interest rates, you'd be kind of worried. You definitely would be thinking, okay, this is not safe.
exactly.
I think they've set a floor. They probably will just continue to hold it at that level until they get debt down to a reasonable level.
On this area of capital allocation, Viatris is doing everything right. I still just don't understand why they sold the biosimilars
No,
business.
that flabbergasted me. It was the fastest growing business.
Yeah,
I don't
yeah,
understand it either. But look, they're trying to transition into one specific area,
yeah,
and they're placing their cards on that. So let's see how that works.
yeah.
Um, we got a question from Joe's Brokel dude. Can you give your view on stock Alberts, ticker symbol AALB.
Yeah, so Alberts is a Dutch company, right? And I find it quite interesting. It's it's just a cyclical company. So if there are recession fears, Alberts goes down. Yeah, so that's a little bit the issue here. And but I must confess, like there's not enough stress in the market yet for me to be like hand over fist buying it, but it starts to be appealing. You know what, Derek? What is so nice about Alberts? They're really outspoken, like Texas Instruments, about their capital allocation. So, and that's a quite unique thing to see on an investor relations website. And Alberts is similar to that, and I think that appeals to many, especially total return investors.
Okay.
So,
So they can still go a lot lower, is what you're saying.
yeah, but
Based on
that applies to every stock in my portfolio. Yeah.
based on recession fears.
Everything can go to zero. Yeah. But if my whole portfolio goes to zero, then there will be total anarchy in the streets.
Yeah. David has asked us for advice on how to not become too frugal. He finds it difficult at times to enjoy buying non-essential things because I know how much good that money will do invested instead.
Oh boy. This is such a deep question. So hard to answer. Really hard to answer. I wouldn't know what to say because but I know exactly what he means. Specifically in the first few years, I had the same because I got so addicted and hooked up to this and I started to look at everything almost binary. But at a certain moment, I think, David, there will come a time probably that you will feel like I should also live a little bit, and you know it when this time will be there. Maybe this is just the time that you are really laying the foundation. But now sometimes in this mode, like that, I think like, you know what, screw it. I got some dividends. Let's splurge a little bit on this. Okay, so be it that I will be a month later financially independent. Also, the mind starts shifting, right? Once you hit your first 100K, something like that, and you see that you're getting 4,000 euro per year. Yeah, that's few $100 per month. Your mind starts shifting already, and at least in my place, I start to become a little bit more loose to this, and stopped eating only ramen noodles with my feeding ramen noodles to my kids.
Yeah, yeah, I get the question as well, but you can't buy memories, and sometimes you just have to.
Yeah,
Sometimes you have to let yourself live a little. For me, how I handle it is quite simple. I have a set amount that I invest every month. It's
yeah,
not 100% of everything that's left after my
yeah,
essential bills. I do have money left over for other activities, and I
yeah,
do not feel guilty one bit. If I want to buy an €8 latte in
yeah,
Starbucks, I will buy it and not blink twice.
yeah,
I already have my allocation aside, so
yeah.
but
That's a good one because I do pay myself first. So and if after that I have something left at the end of the month, which is usually not the case, I could still send it to my broker. But within that, in that money that I have to spend my bills, there's enough also in there to go to the cinema, to do such things. I think it needs to be in the budget.
yeah, I usually use the leftover money to go on holidays. You probably know this by the amount of
Yeah.
times
Yes.
I travel. So but as I said, you can't buy memories, and
True.
I make it a habit of investing the same amount, whatever I've left over. I need to enjoy myself now too. I might not be here in 10 years time. So somebody else
Maybe not in a 1 year or 2 years. Who knows? Yeah.
exactly, and somebody else can live off my dividends. So
Yeah.
I need
Yeah,
to
you
enjoy
know
what
what? You know what would be the worst? If you die next year, and then the future new husband of your wife is living off your dividends. Now think about that.
Okay, dividend talk is cancelled. I'm selling all my shares. Job done.
Yeah. So David, if you don't want the future husband of your wife to live off your dividends, then start spending it.
that took a turn quite quickly. Kevin has asked us a name that he did not know until a few weeks ago is Illinois Toolworks, ticker symbol
Yeah.
ITW. Obviously a dividend king with 60 years of dividend growth. Do you know the stock? Yes. What are your thoughts?
So look, it is a nice, it's a nice business, effectively providing tools, right, to the more professional construction workers. Let's say like that. I don't know what the right English terms are for these, but the company has a lot of debt. So for me, if you want to know, my favorite stock here is Snap-on, but that stays to be expensive. The second one's Black and Decker, and the third one is Illinois Tools Works. If I would need to rank them from a competition point of view or the similar industry, so it is, but 60 years of dividend growth, it says something, right, as well. But just a bit too much debt, so I prefer the others more.
Ron J has asked you a question about your desired sector allocation, and he's asking, why do you prefer in tier one? I cannot pronounce that word.
The Genussscheine from Rush to their
Yes.
regular stock. Well, Ronja, that must have been, how is it? That's called a mistake, because this is just how the Google ticker calls the company name, and this is a direct copy out of my G sheet that I used to support there. So there's nothing special here. It is just the Rush stock here as a tier one, and that's just it. Yeah.
Yep. Reiko has asked us about forward PE or trailing PE. Which one is a more reliable metric? And he's given an example on McDonald's here on that as well.
Well, that's a simple one, or actually maybe not. The forward one is based on analyst estimates. Now, I rather take my advice from YouTube and Twitter, from strangers that I don't know. And the other one is trailing, and it depends again on one-offs or not. So it's also not reliable. So do you trust the unreliability of the company, or do you trust this analyst from Wall Street? I mean, I look at both of them, and both tells me a little bit of a story about consistency, and that's mainly it.
Yeah, but if you had a gun to your head, one is an estimate and one is actually what has been reported.
Yes, but then I would probably go for the estimate for the forward if someone put a gun on my head, simply because the forward doesn't assume one-offs.
Yeah.
So it gives me probably a better representation of where the business stands now than if I look at the trailing and then suddenly, I don't know, they had a tax windfall or something like that, and therefore the PE look low. Yeah.
Dermot has asked a question about CRH. They recently delisted from the Irish Stock Exchange. The broker has moved them onto the LSE. In general, do you know if a stock is delisted, does it have capital gains implications? I'm not a tax advisor, but I'm pretty sure once it's delisted, there is tax because it's basically sold from your account. I'm not sure in this case because it's sold and bought on a new stock exchange. So Dermot, give Revenue a ring. They will tell you. I'm not 100% sure. My guess is yes, there will be some tax implications here. I don't know why they moved them on to the London Stock Exchange when CRH are moving from the London Stock Exchange onto the New York Stock Exchange. So I'd imagine there'll be another sale there quite soon as well. Jean has asked us about a global leader in chemicals for construction, a company called Sika. Have you ever heard of this company?
No, I really need to look it up.
Good. I don't know much about them either. I don't know if they're European or if they're American. So let's look into that one. And then the last one is, what do you guys think about Estee Lauder companies?
Yeah, so I did my first, or we did our first newsletter about L'Oreal, and I also looked a little bit in the competitors there, and Estee Lauder is also in there, and the company has clearly been struggling in share price, but rightly so. They had a revenue decline, I believe, of 10%, even bigger profit decline. I think it had to do also a bit with the China lockdown. But then if I compared it to L'Oreal was just growing and everything. So for me, it tells me it's like the weaker brother from the two, and then I prefer to go for strength for L'Oreal. I think Estee Lauder is becoming a value play, and that's probably why people are looking at it. But in this case, maybe I'm also not too familiar with Estee Lauder because I never went too deep into like with L'Oreal, so I might just be biased here, sure. Yeah, but it's not interesting me at the moment.
Yeah, it's quite funny to hear you say that because they're two. I mean, they're number 1 and 2, L'Oreal followed by Estee Lauder in that marketing. You have one have so much conviction for, and then the number 2 company in that market is like,
yeah, it has to do simply with the how it performed over the last 2 years, where L'Oreal just kept on growing and then Estee Lauder's struggling. Yeah. And that I don't really understand. Maybe L'Oreal will also start struggling now. I don't know. Yeah, right? We saw already with other companies that the consumer trends are changing at the moment. People are becoming more cost conscious and postponing some of those luxury products. So, but Estee Lauder is already struggling,
yeah,
and that's the big difference.
you feel that has to come down to management, really. You've got 2 similar companies and one.
Yeah, or product mix or something like that. In the end, I guess long term, it is a reflection of management. Yeah, but on the short term, there might be like little hiccups that, yeah.
Cool. Yeah, that's the last question of the day. I think that was a good one to end on. So thanks a million to everyone for the questions. Really appreciate them. We do have one that we will get back to next week, and that is Niels Tremel's one asking about a dividend cut. So we will post that poll, as we said, on Spotify, and we will discuss the results then next week.
Thank you as always, Derek, and everyone. Have a good weekend and see you next time.
See you on the outside. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just 2 guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.